Well, the market is up today. S&P 500 is up about 0.46% today. But today, actually, notably, we saw the small caps, Russell 2000, rising 1.59%. But actually, in the last several weeks, it has been, actually in the last couple months or so, it has been the gold and silver, the miners and the mining stocks that has been making a good run here. So we got quite a bit of tickers that I wanted to go through. And also, before we get into these tickers, I also want to do a follow-up from what we've been talking about this week on my daily update videos, looking at things in a 65-minute chart on the S&P. So all of that is coming up right now. Ladies and gentlemen, K Kim here. Welcome to the market update. I hope you guys have a good day, good week. Trading this week. Today we're going to be covering a spider, Russell 2000, and let's do Apple, Berkshire, Tesla. And I depicted some of these, I want to kind of focus more on the gold and silver today and the mining stocks because they've been hot, and I want to talk about that. GLD, silver, GDX, gold, PAAS, sand. And as usual, we will be talking about the Bitcoin before we finish the video. So let's follow up from what we've been talking about this week here on the 65-minute chart and looking at the S&P. So yesterday, this was yesterday, and so we saw a big move towards the end of the day yesterday, but really all of that move came about here. I want to actually address something because there were some questions regarding to the gap, right? Because when you look at the spider ETF, S&P 500 ETF spider, the gap was actually filled, and then I was talking about how we saw a move, 4% move since the lows. Well, that's not quite 4%, but still the narrative is still the same. It's not 4% move, still the 3% move since the lows here. You can see from that wick, from all that, that's still 3% move. That's still a big fluctuation because it was down as much as 2%. As you can see, it was down as much as 2% during the first hour of trading yesterday, and then it flipped back and was up 3%. Towards the end of the day yesterday. But I think it's that 4% move is not that important. What's really actually important is bears failed. Bears failed to fill that up gap. They really fiercely brought it down. And I actually thought, looking at the spider ETF, I didn't figure it out until later, that they filled it. They filled it, but they didn't. And that lies kind of a big problem in looking at things longer term because we still got these gaps open. If you've been following me on Twitter, if you've been following my videos since back in late March when I saw this gap open, if you recall, I said as we buyers want to make sure this gap remains open as long as it can. The longer it stays open, the better it is for the buyers. You guys remember that. And then we saw a big move from then. And then we gapped down, right? And then we gapped up again. That turned that into an island bottom. That's why we got a little box. I put a little box there. And then we saw that what? Island continuation gap. And I said the exact same thing. Buyers want to make sure this gap remains open to keep that jump start momentum going, right? You guys remember me saying that back in early April. We want to see this gap remains open. Bears obviously want to kill that pressure as quickly as possible by filling that gap. They were not successful. Again, this gap was March 23rd. This gap was April 3rd. Today's May 15th, right? So it's been a while since that gap, these two gaps never been filled or never even got retested. And then we saw another decent size gap up, which was back in what? April 22nd. April 22nd. And this week, bears really brought it down to attempt to challenge this gap, to attempt to fill this gap. And looking at the S&P 500 index, the cash market, you can see bears were not successful. So actually the gap, they attempt to fill it, they filled little bit. You can see they fill about 25% of it, right? About 30% of it, you could say, but was not able to fill the entirety of that gap. And we've been talking about that pivots, right? We got that rising pivot there, and then we got that rising support, also that pink moving average, that active support here, that's rising. It was in that vicinity. So bears really needed to fill that gap. So because the bears failed to fill that gap, that gives you more bearish connotation, because we've seen what happened just in the past, right? I mean, these two gaps never got challenged again. After these two gaps were open, bears never came back down and even tried to fill. We couldn't even touch it. That means those two gaps are very, very pure. And there's a lot of momentum that coming out of those gaps. And then you see, this is a reason why tracking gaps is really important. If you've been following me, I've been tracking gaps for years now, and I've been doing it on almost every week. When I used to do my videos on a weekly basis, now I do it with you guys on a daily basis. So I think it would have been better if bears filled that gap, but they didn't. So that we got that, breakaway gap, island continuation gap, and that another continuation gap still not filled. And from that failed attempt, you see how much bulls brought it up now, right? Since the lows of yesterday, it's about 3.38%, right? And so today what happened was we saw a gap down, right? And that's a good attempt from the bears. And we talked about yesterday how bears want to kill this momentum as quickly as possible, right? But the problem was that rising moving average, which we've been talking about. That rising moving average continued to act as support every hour. The momentum was already there. And we talked about that looking at the oscillator yesterday, right? The momentum was already there. So any kind of pullback attempt that was made from the sellers, buyers just came back in and just bought that dip, and knowing that this moving average is still rising. And then that's what's that? We got 1, 2, 3, 4, 5. So fifth hour, you can see yesterday we talked about how we want bears to utilize this moving average that is still declining, right? And that you can see that some sellers did come at that level, right at that level, and pulled back. But at the final hour, we did slightly get above it. However, slightly getting above it doesn't really tells us that bulls reclaimed it. We still, even today, this short-term moving average is still declining. So I still want to give benefit of the doubt to the sellers in the short term of things. In the micro term, yes, it's bullish. Last couple days, it's bullish for sure. But until I see this moving average start rising, I still think could be some choppiness could be there, or some kind of a shakedown or something like that, unless bulls can gap it up again Monday. That will be the best bet, because we're just right at it now. If bulls don't want to deal with this resistance right now, gap it up on Monday and continue higher. The gap up is great. The reason is because let's say we gap up, we see a nice gap up to 288 or 289, right? And let's say bears brought it down right after gap up, it got flushed down. It's going to act as support right away. And at that point, you see that moving at now the price staying well above it came down to retest it, and now the price is ready to go higher. So right now, even you can see even yesterday we talked about it. We was here yesterday. Remember? And now we're getting a lot of momentum, but we're still not quite at the overbought yet. We're not there yet. We got a little bit more room to move. That means there could be another push from the buyers going into early next week. So we'll follow up on that on Monday on the daily update, and we'll examine what had happened here. So let's go to our daily chart here real quick. So looking at the S&P 500 index, let's actually go to Spider here. Looking at the daily chart here quickly, you can see that that moving average, and we talked about that I've adjusted this moving average, I think back in late April, because I feel like there was that scooping action, right? So because that active support here, that active support here, once again, it active support here, it's not able to gap below this moving average. Remember, this never happened on the Spider. So we found support here, we're continuing higher. So we do see a pretty impressive resume on this moving average on the daily chart here, here, and here. And with that, we are still cultivating higher lows, and that in itself is also rising pivot, right? That's what you see on a 65-minute chart, by the way. That big, rising pivot we've been talking about, that's it. And that's where we find support coinciding with that moving average. As of now, we are also above this short-term moving average, and we've gotten pretty good momentum. This is a 3-day bullish reversal candles that needs to be confirmed. Bears make sure there's no breakout of this. This is some kind of a bullish, it's kind of like a bullish piercing candle, this middle one, but the 3-day, putting 3-day candles together, it's kind of like, it has the characteristics of some kind of a morning star reversal. Like it is a bearish candle, and then we got a bullish candle, and then we got a bullish candle, right? So we got that 3-day reversal candles happening here that needs confirmation by closing above this level, which is at 286. He needs to close above it. So we need to close the day above that level. We can't like close it and then come back right back in. That will be a fake breakout. So bulls are working with a breakout scenario here, and that could probably get us to about 294 again. And I think, we'll talk about the next week, but bears want to make sure that there will be no breakout. Bears want to make sure this little momentum that bulls have gained in the last couple of days, bears want to make sure to kill that as quickly as possible. Remember, you let bulls hang around, you let bulls float around, they're going to bring it back up. So no playing around, no fizzling around. Just bears going to do what they do best. Bring it down hard and come down and fill this gap as fast as possible, or come down and gap it down or something like that. But right now, there's a lot of bullish momentum. Again, as we talked about this oscillator also, right? So we'll come back, we'll come back on the S&P, we'll come back on Monday, and we'll follow up on that. Let's look at Russell 2000 because, Russell 2000 been interesting. It looks like, I think a lot of people are looking at this as potentially a double top, and then this was a neckline. We initially broke below the neckline. And this is why I don't do these measured moves. Like you could measure it here and then measure it here or something like that. Again, sometimes it works, sometimes it doesn't, but there's a lot of times there could be a lot of fake outs, a lot of head fakes. That's the neckline, right? That's the neckline that everyone's looking at. As soon as we broke below it, which was on Thursday, a lot of people looked at this, okay, that's a confirmation of this double top, and market is ready to maybe come down to 108, and then how quickly it has gone right back up here. Obviously, looking at things in a more of a longer term perspective for the Russell. Russell looks much weaker than S&P, and you can see even here year to date, S&P's still down 11%, but Russell is down negative 25% year to date. So obviously, a lot of work still needs to be done for the Russell 2000, but we are still holding that support, all right? And what bears need to do is really break below that support and really come down and challenge this gap. And that's really what that is. And you can see there's a little gap here from here. This is actually a great opportunity for both bulls and bears on the Russell 2000. Bears can utilize this gap and provide resistance before this thing head lower. What buyers can do, if buyers can gap this up on Monday, this thing right here will turn into a what? A bullish island reversal. So this gap, depending on how you utilize it, either bears utilize it as a resistance, because if we just go fill it, if the buyers come in, step in on Monday, we continue high and we just go fill it, it's going to act as resistance, at least in a short term. So either bears going to utilize it as a resistance before maybe turning into a little, what? A bear flag maybe, and then leg lower. Or buyers going to utilize this as a, opportunity to make this into a island bottom reversal by gapping up. If we do something like that early next week, I'm pretty sure it's going to come and fill that gap. So we're kind of at this juncture where bulls are gaining momentum last couple of days, and bears need to kill that momentum as quickly as possible. And you know this market, how quickly the short-term sentiment changes from bullish to bearish, from bearish to bullish, how quickly that sentiment's been changing, right? Even just last week, just this week actually, just think about how you felt on Monday and Friday, right? When the market was up here, it looked bullish. It looked we're gonna continue higher, make a big bullish move, and how quickly, see, Friday, Thursday, Wednesday, Tuesday, Wednesday, we came to the market, how quickly that dream has been disappeared, right? So we're in this environment where things can move, the sentiment can change quickly. So we really can't rule out what bears are capable of doing and what bulls are capable of doing. So that's kind of where we're at. But we have to keep in mind, bulls have gained some momentum last couple days. So bulls really want to continue in that momentum, gap it up, make this into an island bottom, and then bulls can get back up here. Bears, make that into a bear flag, utilize this gap as a resistance, right? Let's go to equity here. I own all the tickers here in this box that we're gonna cover today, except Tesla and except Sand. But I own all of them. As a disclosure, I own all of them in my portfolio. And obviously, I own them for long term. I own them since the lows here. And so, doesn't mean that right now is the buying opportunity. But let's talk about Apple. And I love trading Apple. I've always been trading Apple since back in 2012. I always trade Apple. I always have money in Apple. And Apple's been a great vehicle for long-term trading, long-term investing also, because it gets a nice moves. I mean, if we just go to here, look at a weekly chart, and you can see here. Let me get rid of this. You can just see that there. Once you get into a trend, you get into these moves here, right? And you get these pullbacks, these corrections along the way, which provide a good level to accumulate. But looking at things in a daily chart here, we're well above moving average. And there's nothing surprised about this pullback. I mean, after this kind of run, giving a little bit back, that's really what, you know what I mean? There's nothing crazy. There's nothing wrong. Everything is bullish at this point. If we see any kind of steep decline, like let's say this thing coming down to retest, I don't know, 288, that's buying opportunity in my opinion. I might probably buy more. I'm not going to be buying up here unless you're short term, but not up here. But if he comes down to 288, 284, that's a great level to buy. But for now, we want to continue to give benefit of the doubt to the buyers in the short term. And this is if I do like that 65-minute chart, analysis that I do with you guys on these daily update videos, just looking at Spider, you can see we're acting, this moving average acting as support here. We're just got that to that level. You can see that my oscillator is curling back up, showing that bullish momentum is coming here. So I want to continue to give benefit of the doubt to the buyers, and I want to continue to be long on Apple. Again, any steep decline, 284, retest some of these, these moving averages, man, that's a great level. But that's exactly why I bought it here when there's some moving average clusters here. You can see that there's a gap. The gap was filled, came down to retest that moving average. Let's go to Berkshire. Berkshire, is really like acting like a bank stock. It's been underperforming. Just last several weeks. It's really underperforming. And if you're a value investor, and if you're looking to hold things long term, and I don't know if you're gonna make low or low, and I don't know where the bottom is, but I think some of these levels at 161, 168, even like 150, anywhere this level, it'll be a good level for value investors. Nothing for short-term traders, obviously, or swing traders. It's only for value investors. I think long-term of things, let's go to weekly here real quick. Long-term of things, I think, could be, potentially be some level of support here. We're getting close to that prior resistance also. So somewhere in that vicinity, again, nobody knows where the bottom is. But when you're value investing, you never trying to pick perfect bottom, you see. You pick a price that is good for you, and you think that 169 is a good price for Berkshire Hathaway, looking at things the next, at least 2-3 years, and that's a level. And then if it falls lower, then you could accumulate more, essentially thinking that you're going to hold long term. I just noticed something here on the 65-minute chart. It's interesting that we got some bullish divergence in the short term of things. Again, this is such a short term analysis that it could play out, it might not, but I see that might give a little pop. But we got all these moving averages pulling back. So benefit of the doubt goes to sellers in Berkshire Hathaway at this point. But I just wanted to look at quickly on a daily. So daily looks like this is a daily. Daily looks like we're at a pretty extreme. We're at pretty extreme oversold vicinity. And then you can see how oscillator made a lower low while the price is at a higher high. That's what is known as a hidden divergence. It's not as strong as if you actually see a real bullish divergence, but this is kind of a hidden divergence. It's a weaker version, but you can see we're pretty oversold here. Pretty oversold here on the daily chart, so keep that in mind. But again, with the bearish sentiment, with the oversold status. Let's go Tesla here. Last time I covered Tesla on this video, it was what? I don't know, like a month ago or something like that. I think it was back in April 21st. I haven't checked. Like I actually have not done anything to these lines. And you can see how this 703, I think I gave you that level last time, it was protected. Do you know why? Because there was a gap area. And that's how bulls are protecting these gap areas. This is why it makes sense that you keep track of these gaps. Bears brought it down, then you say should have came and fill it or even gap it down, but didn't. You can see that moving average act as support. Also, we're back at this level. So potentially some kind of a consolidation pattern, potentially, right? But I think as long as the price stay above this moving average, I want to continue to give benefit of doubt to the buyers. If we do see an event where this thing come back down again, you can see bears could, because bears already tried this first time. Bears trying to fill that gap, failed. Second time, bears trying to fill that gap, failed. Let's say third time, bears trying to come and fill that gap. Well, they're unlucky this time because because it's funny, on the second time we had that moving average hanging around to support it up. By the time this thing comes back down here, we see that blue dotted moving average. Well, that's going to come and support it. And so I have to say 703 is pretty strong support level. And currently we are dealing with the bullish sentiment. Let's go to gold. So gold, we've been talking about how gold broke out. There is that 7-year base. Looking at this weekly chart, we saw that rising pivot. That's rising pivot. right? Prior resistance acting as new support. That's a COVID-19 decline. Very quickly got back up. We cultivated another higher high there. So I want to continue to be long, and I want to continue to stay bullish. However, this does not mean you start chasing up here. You start chasing up here, unless of course you're short term and you're gonna scalp it, nibble it, or you're gonna day trade it or quick swing trade it. But if you are a quick swing trader, potentially we're breaking out of this kind of a bull pennant type of pattern here. Maybe next leg higher with that. And I told you guys that I expressed the fact that I don't like to trade off of those kind of patterns. It's just because I don't like it personally, but because I've seen so many times where it looks like something like this, and then it just do something like that. How many times have you seen it? Seriously, like it looks like, oh my god, man, it's breaking out. Oh my god, it's gonna go to 180, right? And then boom, done. Or it looks like it's gonna break down. Oh my god, it's gonna go 140, and then up, just goes right back out, right? So that's why it's pretty tricky trading these kind of a short-term patterns, and that's not how I like to do things. But if you are, that hopefully that let's examine though. We've seen some flagging pattern did play out here. Some here did play out. So we got pretty decent flagging pattern that's been playing out. Looking at last couple years. So it looks like it's been actually doing well in that pattern. You saw the move, a bull pennant type of pattern. We broke out, another bull pennant broke out. Looks like we got another bull flag, and that's kind of drawn out flag though, right? That's from what? Like that looks like, yeah, that's 9, 10, 11. That's 4 months. 4 months of flagging, but so you would look at this more of a primary kind of, and I would actually like to buy in these kind of pattern, these kind of more of a like drawn out flagging pattern. And so we did make a move. We saw that broke out. So it looks like hopefully we'll break out to the upside there. Let's go to silver. So I've been actually covering silver, right? I think last week I covered it, and what I talked about is why. I don't know if you guys remember from last week's video. I don't know if it was last week or week before that, but I've been covering silver. Why chase gold when you can get into silver, right? We talked about that, and you can see silver just outperforming gold quite a bit, but they're lagging a lot because silver has not broken out of this. Look at that. Looks like it was a fake. Head fake breakout there. That's a brutal right there. See if anybody got trapped there. But gold is somewhere up here already. Silver is down here. So they're just going to play a catch up. And so I've actually not been adding into my gold positions, but I actually been adding on my silver positions on these pullbacks. And not really based on the short-term pattern, but more of a long-term connotation where I believe that silver is going to do a catch up, and also we talked about, and again, last time I didn't change anything in my chart since we covered it on this market update video last week, I think, and we talked about that island reversal, right? There was a big gap down, we gapped right above it, so this become an island, and then we thrust higher, and then we talked about this was that major low, right? And so if this becomes that trap, right? Because that it traps both ways. It traps the bears thinking that this thing is going to crash. They short more, get excited. It traps the buyers, the bulls, because they get scared. Maybe they've been long on silver. They close out their longs or their stops are getting taken out, and then silver just goes to the opposite side of trade. So. And I've seen a lot of these kind of setups happening a lot. We also talked about it in Bitcoin, which we'll be talking about towards the end of this video. But a nice gap up today. Nice gap up. Let's move this actually. Let's do this. We came up quite a bit. From here to here, that's quite a bit of move. Need to hold it. It would be best if the bulls can, keep this gap open. If and continue higher from this. if it gets filled, that will be better than if bears gapping it down. So I think if the buyers can defend this 1540, 1483, there's good chance that silver can continue to make its run there. Let's go to GDX. GDX, same story here, looks similar on the weekly. So when you go to here, you can see we've broken out. We're fully breaking out of this 7-8 year base. What I'm actually looking for is a pullback so I can buy more. But the problem is it's never that easy. Sometimes what's going to happen is sometimes this is what's going to happen more often than not, because you know why? Because everybody can see 30-ish level. Everybody knows that 30 and 31 level. That is what I call a prominent level, like ubiquitous level. Like everybody knows that was a level because we know how many times that level acted strong resistance. So everybody knows 31. And I always say market is insidiously clever. So everybody's looking for that retest. And when everybody's looking for it, sometimes market is not going to give it to you. More often than not, what it's going to do is either going to pull back a little bit and then go higher, or sometimes it's going to pull back much deeper than what people anticipate. That way, people who's buying at 31.30, buying that dip, they get scared, they got to get out, and then market reverses on you. So I think low probability, we're going to retest exactly at 31.30. Sometimes it does, but more often than not, it won't. I'm leaning towards maybe a smaller pullback and then going higher. If not, that thing just completely plunging and everybody gets scared. Everybody's going to start talking about this is a fake breakout, man. That's going to come down. That's when this is going to... So when you're dealing with the breakouts, it's never that simple. Never that simple. So the best bet is you always want to get in before the breakout if you can able to forecast it. And I actually was long GDX, I believe, here. And I even bought it here. And I had to go through the drawdown. I actually did. I held everything. I did not close out any of my long positions on that COVID-19 decline. Anyway, let's go to gold. Gold, same look there. It's going to look similar to GDX. They all going to look similar. These mining companies, see that? So same analysis applies here. The pullback. And how much will it pull back? You know what I mean? Like where would it pull back? Because we are seeing a pretty extended move there. Could it keep going higher? Yes. But sooner or later we're gonna pull back, and that's gonna be the tricky part because now we all know, the whole world know that gold's been breaking out, and everybody wants piece of it. But then there will be kind of a savvy traders out there, savvy investors, like, you know what? I'm not going to be stupid here. I'm not going to chase it up here, man. I'm going to wait for it. And when everybody thinking that, sometimes it doesn't pull back. Sometimes that thing don't pull back. And you know exactly what I'm talking about. So how I like to trade it is, obviously, I want to get in a little earlier and then maybe close out a little bit. Like I did close about 1/3 or something like that. And then if he keeps going higher, I just keep writing what I already have. But if he pulls back, I'll be watching closely to see which level I want to add. Maybe I'll head here, and then if he pulls in more, I'll add. And that's kind of how I like to invest in a stock like this. Let's go to Pan American Silver Corp. Same. This is a same look here. A little bit choppier look, but similar look there, looking at things in longer term. Again, we've saw that nice breakout there. This time looks like that actually broke out with a gap up. And this is actually nice. I actually like it when I see this cluster and it breaks out with a gap up. That's safer because in the event that where bears bring it down, that gap area is going to provide support at least. So I actually like it when I see that pennant pattern, the consolidation, and then when we see a continuation breakout to the upside with the gap up. That's actually what I like. I like that setup more than it pokes its head up, because then there could be so many shenanigans that could happen. Let's go to sand. Same look there. Go to weekly. Breaking out of this. This one is, about 8-year pullback, but made a big run from here to there what will it do? When should we buy, right? I mean, am I gonna chase it up here that looks like potentially breaking out of this up here after made this kind of move, or is that gonna be a steeper pullback? And that's always the question. I never like to chase anything, right? So I don't have any position on sand yet. I'm watching to hopefully get into it, and what I'm looking for is how much will it pull back, right? Will it pull back to maybe 7? Or will it go up more and then let's say go to 10 and then pull back to 8 before going higher? You see. So it's never black and white. It's never easy. That's why I always like to get in before the breakout, because after the breakout, when it gets all the attention, it gets very crowded. You know what happens? Have you ever gone to Costco when it's super crowded? It's very, very hectic. And I don't want to be in Costco when it gets crowded. So right now it's very, very crowded. Everybody wants piece of gold. And I think there could be some shenanigan that happen here. Sometimes it could just keep going higher also, but it's rare. So we'll keep an eye on that and see where the good levels get in the next several months or so. Last one, let you guys go with this. So here, this is a Bitcoin. You can see we talked about this level. I put a box there telling you that that's a wild card. We come up because right now that was important support. This is what I'm saying, man. $8 was very, very important. Everybody knows that's the level of support. And so when we broke below it, some people might panic a little bit. The longs are, closing out their positions with loss, and the shorts, they get excited, maybe short more. And then as we kind of build, a lot of people want to look at this. If this is what I mean, a lot of people want to look at this as what? Bear flagging pattern that never really played out. And we talked about how if this thing start getting up here, man, with some volume, this thing could very well get up to that falling channel. But still, though, in the primary term sense, we're still in a downtrend, are we not? You can see the high, lower high, and lower high. And we got the low, lower low, low, low. So in the long-term picture, I have to give benefit of the doubt to the bears. In the short-term picture, I have to give benefit of the doubt to the buyers. In the midterm picture, neutral, because in the midterm, we're still pretty much going sideways, haven't gone anywhere, right? So I'm still waiting. I like to see this thing actually breaking out of this and then doing something like this and cultivate a higher low before making into an uptrend. Until then, it's a bit vulnerable at this point. And right now, Bitcoin is getting a lot of attention. What was this guy's name? Was it Bill Ackman? Who was that? Saying that they're investing in Bitcoin or something like that. So once you see an article like that in a mainstream media where millions and millions of people are like, oh my God, Bitcoin, oh my God, that's when you don't want to get into it emotionally and chase it down, right? So I'm like, okay, now that article comes out, Bitcoin makes some big move, because that's what? From this low, that's a 141% move, man. So that's definitely tough to chase it up here. I think I still have to kind of see how, because benefit of the doubt. Because I wouldn't get into this trade just for a couple day trading. If I'm gonna get into it, I want to hold for, I don't know, at least a year or 2 years or something like that. So when I see this trend is still down, it's tough for me to go long. And so I'd like to see a changing development of an uptrend before I get into it. So, well, there you have it. So let's see, and I'll come back to you guys on a daily update on Monday. See whether we see a follow through on Monday, or bears can, because we got some energy building here in 3-day. Bulls really want to utilize that. Bulls really want to take advantage of this situation, and really the best bet for the bulls will be just gapping it up and go for 290 and maybe take out 294 or 295. Bears, kill this momentum as quickly as possible, because we do have a short-term bullish momentum. Kill that, come back down, trying to re-challenge this gap, and that will be what bears want to look for going into Monday. So Monday I'll come back for you guys. on the daily update video and go from there, right? You guys have a wonderful weekend and good luck trading next week.